So, good evening, good morning, good afternoon, depending on the time you are going to be watching this video. It's SM right here, and I'm going to be your host, your tutor, and your friend and brother for today. Everything that symbolizes love and unity. Alright, so I would just want to speak on like bias storyline because I want to just talk on time frame, how to use time frame to build bias, like your storyline, whatever you choose to call it, whether you call it bias or storyline. I don't it's not about the name, it's the logic behind it. All right, so first of all, I have four time frame here. So when it comes to building bias as an intraday trader, when it comes to building bias, I feel like there are two time frame that we most normally don't really pay attention to because we sometimes we say it doesn't matter. Like we used to say it doesn't matter, but it actually does matter, right? Alright, so the first two time frame is the monthly time frame and the weekly time frame. So the reason why I didn't put the monthly time frame here is because the monthly time frame is just more like it takes 30 days to form one particular candle, right? And so you can't be waiting for it for 30 days before you take a trade. So the monthly time frame is just more like the time frame you go once a month. You get that is like at the first of every month, or no, yeah, at the first of every month you go to the monthly time frame. So I will still talk more on it when I go to the chart, but I just want to pay attention to this four time frame: the weekly time frame, the daily time frame, and the 4 hour time frame, which are mainly used for buyers. Then from the 2 hours, 1 hour, 30 minutes, 15 minutes, whatever time frame, those ones are mainly used for entry. So I want to try to narrow it down so that we can learn. All right, so there are two major ways we build bias. You can build bias using key levels. You can build bias. Sorry, I can't write on my screen. I can't write on it because I'm using my phone. So we can use key level to build bias. Secondly, we can use liquidity to build bias. So first of all, I want to take the first one, which is key level. Key level. So we have different type of key level which you should be familiar with. We have the A-shaped key level. Let me just break the still show you. So we have the A-shaped key level. This is how an A-shaped key level looks like, right? So we also have the V-shape. We have the V-shaped key level, and then we have the open close. I don't know if I can do that right now. So we have the open close, just like two consecutive candle, open close to the downside, create a bearish open close. You have two type of open close. You have the bullish open close and the bearish open close. So this is more like a bearish open close, right? So this is just the type of key levels we have. So an A-shaped key level is supposed to use for sales, right? Because we're expecting price to come back to that key level, and then we'll take our sell from there. Then a V-shaped key level is used for buys. Is used for buys, and a bearish open close level is used for sell until it is proven otherwise. What do I mean that until it is proven otherwise? Because since if a V-shaped key level is to be used for buys and price comes to that key level, and break with a body, it's an impulsive move, that key level can now be used for sell. It is still valid, but it cannot be used for buy again. So we are now using it for sell. We are expecting price to come back to that key level, then continue the sell. That is not what I came here to talk about, right? I didn't came here to talk about key level. Alright, so also for the key level, for the A-shaped key level, it's supposed to use for sell. When price comes, breaks it with an impulsive move, then we are expecting to use it to push the market upward. Alright, so also for the I'm gonna use the one. So for this particular V-shaped key, this open close, an open close, since it's a bearish candle, we're using the close of the candle, the close of the bearish candle. So an open close level like this is supposed to be used for a sell. It's supposed to be used for sell. Why? Because we're expecting price to come like this and then drop. But if price breaks with an impulsive move, it's an impulsive move, you cannot use it to take a buy. You get what I'm saying, right? So that's just it about key level, basics of key level, right? So I told you there are two ways you build your bias, on the weekly time frame. All right, so let me run you through the basics, or let me like call it basic. There's nothing like advanced. Are you getting what I'm saying? There's nothing like advanced. Everything is still basic. All right. So we said an A-shaped key level is supposed to be used for sell. So let's say for an example, in the monthly time frame, on the monthly time frame, we have an A-shaped key level like this that is to be used for sell. So what are we expecting price to do? We are expecting price to come into that A-shaped key level and drop. You get what I'm saying, right? So but when it comes to building buyers, on the weekly time frame, we are looking for price to do two things. We are waiting for price to come into a key level, right? Sorry, we are expecting for, I want to draw a candle, don't mind me. We're expecting for price to come into a key level. Let me remove this thing, sorry. We are expecting for price to come into a key level like this, reject that key level and close below. Are you getting me? Let me make it closer a bit. Price to come into a key level and then close below. So when it comes to building bias with key level, candle rejection and candle closure matters a lot. Are you getting what I'm saying? Candle rejection and candle closure matters a lot. So what the weekly time frame can do this is the first criteria we are waiting for from the weekly time frame. We're expecting the weekly time frame coming to the A-shaped key level that's to be used for sell. Then we are expecting it to reject that level and close below that level since we are looking for sell. This is the first criteria that needs to be met on the weekly time frame. So when something like this happens, what do we do? When that criteria has been met, we drop one time frame lower. You get what I'm saying? We drop one time frame lower to the daily time frame. We drop one time frame lower to the daily time frame. On the daily time frame, what are we expecting to see? What the daily time frame to give us two particular things, just two things. On the daily time frame, what daily time frame to give us two things? The daily time frame, what daily time frame to give us a liquidity sweep as an up push and a breakout. A liquidity sweep and a break of structure. You can call it market structure shift, a liquidity sweep and a break of structure. A liquidity sweep and a break of structure. Or we want price to give us a most recent breakout. So these are the two things that we're expecting the daily time frame to give to us. Yeah, this is what we're expecting the daily time frame. If price gives us this on the weekly time frame, we're expecting to see this on the daily time frame, or we see this. Yeah, just the two. We're expecting to see this on the daily time frame, or we see a most recent breakout. Then this is where it now becomes interesting. When price gives you a most recent breakout on the daily time frame, the 4 hours time frame, this most recent breakout on the 4-hour time frame is going to definitely be a sweep and a break of structure on the 4 hours time frame. A sweep and a break of structure on the 4 hours time frame. That is what is going to be on the 4-hour time frame. But what we want to really see on the 4 hours time frame is that we want to see a breakout. Right? We want to see a breakout. We want price to give us a breakout on the 4 hours time frame. When if these conditions have been met on the daily, pay attention to what I'm saying. Now we are trying to build content, because the more content, the more valid your trade becomes. See, we know that there is no strategy that is immune to losses, but the more content, the more confidence, or will I call it confidence, your strategy gives to you, right? All right. So then, if price gives us a most recent breakout on the 4 hours, this is what we are expecting to see on the 1 hour time frame. We are expecting price to give us a sweep and a breakout. Are you getting me? This is what we want to see on this time frame. So I said the weekly time frame, we want to see price coming to the weekly key level, and we want to see a candle rejection and a candle closure. First criteria has been met on the weekly, so we can't just start selling. We want the daily time frame to be in alignment with what the weekly time frame is doing. So on the weekly time frame, we want to see price give us a liquidity sweep and a break of structure. Are you getting what I'm saying? A liquidity sweep and a break of structure, or a breakout. So why, if that is met, we go to the 4 hours time frame. The 4 hours time frame, we want to see a most recent breakout. We want to see a most recent breakout. And when most recent breakout of the see, we go to the 1 hour time frame. The 1 hour time frame is definitely going to be a liquidity sweep and a break of structure. So this is the type 1 way of looking for your directional bias or your storyline. Then there is what we call the single candle formation. The single candle formation is what we call the single candle formation. I'm just going to be changing the weekly time frame. So it depends on which place you are building your bias from. If I'm building my bias from the daily time frame, I want to see a candle rejection just like that was shown on the weekly time frame. I want to see it on the daily time frame. And what I expect the daily to do, if the time frame is coming from the weekly, I want 4 hours to do it. That's just it. Nothing more. You are doing the same thing. You are repeating the same thing at every given time. So I said there are 2 ways you build your bias. Then the second one I said is using liquidity. You are using liquidity. So there's what we call the single candle formation liquidity. So let's say this is a monthly candle. A monthly candle. Let me put the week. Let me put the week. Monthly candle. Monthly candle. So then we have price give us something like this. What we are expecting to see is that we want the next monthly candle to come into this level, sweep liquidity and close below. Are you getting what I'm saying? In key level, we want price to reject and close below. But when we are using liquidity, we want to see a sweep of that previous weekly high or low and a close below. A sweep of that previous weekly high or low and a close below. So this become week 1, week 2. And so what are we expecting week 3 to do? We are expecting week 3 to come down to take out the low, because if the previous weekly high, this previous weekly high acted as the internal range liquidity, price swept the internal range liquidity, we are expecting price to come and sweep the external range liquidity. So what are we expecting the next weekly candle to do? We are expecting it to come down to take out this previous low. We are expecting it to come and take out that low. So once this has happened, let's just say this. Once this has happened, what do we do? Because price has already given us a sweep and a close below, a rejection and a close below. So on the daily time frame, we still want price to give us a sweep and a break of structure, confirming the direction of that which the weekly is going. Weekly has already given us our confirmation. We want to see price come into the previous weekly high, sweep the previous weekly high, reject and close below. On the daily time frame, we want to see price give us a most recent breakout, sorry, a sweep of liquidity. Let me mark this sweep. A sweep of liquidity and a break of structure, or price giving us a most recent breakout. I said if price give you most recent breakout on the daily time frame, we're expecting price to give you a sweep of liquidity and a breakout and a break of structure on the 4 hours time frame. A sweep and a break of structure on the 4 hours time frame. So, but while we are waiting for the 4 hours to give, we want 4 hours to give us a most recent breakout. So I said if price gives you a most recent breakout on the 4 hours time frame, we're expecting the daily, the 1 hour time frame to give us, sorry, we're expecting the 1 hour time frame. Let me draw this thing down. We're expecting the 1 hour time frame to give us a sweep like this, and a break of structure. I already told you that when you are building bias, when you are building your bias, you pay attention to just 3 time frame: the weekly, daily, and the 4 hours. Anything from the 4 hours to, you see the 2 hours, the 1 hour, and the rest of them as an intraday, they are mainly for entries. You get what I'm saying, right? Alright, so this is just basically the type 2. We want to see a candle, weekly candle high be taken out, use as external range liquidity, internal range liquidity, price coming to take out external. So when price takes out the weekly high, we want to see a rejection and a close below. So when we see a close below, we want daily to give us a sweep and a break of structure, or a most recent breakout. So if price give us a most recent breakout on the daily, we want to see a sweep and a break of structure on the 4 hours. But if price give us a sweep and a break of structure, we want to see a breakout on the 4 hours. So if we see a breakout on the 4 hours, we want to see a sweep and a break of structure on the 1 hour time frame. Alright, so that's just how it is. So let's go into the chart. Let me look for which pair. Yeah. Sorry. Let me remove this. Man. So I said something that when let's say for an example, this is the first time for me coming into AUD USD, I would like to go to the monthly time frame. What am I looking for in the monthly time frame? I want to look at where price is reacting from. Where is price reacting from on the monthly time frame? I told you there are 2 ways you can build bias. Look at what is happening here right now. Price gave us a sweep of liquidity. Can you see this? A sweep of liquidity. Sweep this high. Can you see what is going on? Sweep this high and close below. Where is price reacting from? Which key level is price reacting from? For me, let me make this thing very clean. I don't like to see this. You can see I took 2 consecutive sales on AUD USD. So at what price, where is price reacting from? Which key level is price reacting from? Which key level is price reacting from? Basically, we can't see any key level on the monthly time frame, but when we go lower, we'll see a key level. But let's just mark this thing out. So price has already given us the first, what we want to see first. We want to see a sweep. I told you there are 2 ways you build bias. You can build bias using the liquidity or the key level. But what price gave to us here was the key level, was the liquidity type of entry, was the liquidity type of building bias. Liquidity type of building bias. So in a scenario like this, what will I do? I will drop lower. I'm dropping lower to the weekly time frame. Coming into the weekly time frame, price is in that level. Sorry. So you can see from here, price is reacting from this bullish open close. Right. So price reacted from this bullish open close. Let's remove this, narrow it down. Let's build it. Let's now build it from weekly now. Let me turn on this thing. So price is reacting from a bullish open close that was disrespected once. I was disrespected once. Then this becomes our internal range liquidity. This particular liquidity right here becomes our internal range liquidity. So I said on the weekly time frame, we want price to give us a rejection and a close below. What did price did? What is price did? You can see price came into the level, rejected and closed below. Type 1 has been met. First criteria on the weekly has been met. I'm just putting that there. First criteria on the weekly has been met. I'm trying to look. Let me look for something that I can use to. Sorry, don't mind me. Just trying to make sure. No, let me use this. That's too big. That's too big. Sorry. I'm looking for something. Something that I'm looking for. This one. I don't want to write anything. This one, not this one. Sorry. What's the name? What's the name of it? I've forgotten. Yeah, this is what I'm looking for. I want to just pinpoint where I want to do. Alright, so we said once we see a rejection and a close below, we want to go to the daily time frame. I told you that on the daily time frame, we want to see a rejection, we want to see a sweep of liquidity and a breakout. We want to see a sweep of liquidity and a breakout. So what did price did here? You go to the line chart. What do you see? What can you see? Price gave us a breakout. Let me go back to my favorite. Price gave us a breakout right here. A breakout. Let me go back to the line chart. Breakout and price swept the previous daily high. Price swept the previous daily high even before sweeping this particular liquidity right here. Can you see? First criteria has been met on the daily. So what do? We go to the 4 hours time frame. We say we want to see the most recent breakout. So what the price did? Can you see something? I want to show you something right now. This was where the breakout happened, right? On the daily time frame. Go back to the daily time frame. You can see that was where the breakout happened, right? Go to the 4 hours time frame. What do? You go to the line chart. When you go to the line chart, where is the breakout? Where is the break of structure or the most recent breakout? I'm trying to find it. Where was the most recent breakout? The most recent breakout was here. It was this particular one. This one. Although that was not the most recent. We are talking about the most recent. The most recent was this one. This particular one. This A-shaped key level that was disrespected. That's the most recent breakout. So going back to line chart, what can you see that price did? Let me position it where? Can you see price came back, did not just came back, price did what? Swept liquidity close to the level, then tap it to a key level, and then started dropping. So in a scenario like this, if you are scared and you don't want to take this, what did I say again? Price has not given us a sweep, a rejection and a close below. So in a scenario like this, you can go to the 1 hours or the 2 hours time frame. Sorry, don't mind my network. I don't know what's wrong. I don't know. So sorry, my network went before. Alright, so I said, so if you are scared, you don't want to take the trade for the 4 hours time frame, what do you do? I say you drop one time frame lower. So already price has already rejected 4 hours, give us a close. This was where price closed. I want to mark that level so that I know what I'm doing. This was where price closed. So what do? You drop one time frame lower to the 1 hour time frame. We are still trying to look for entries, confirmation entries that we can use. Alright, so on the 1 hour time frame, what did price did? Price did something interesting. Price did something interesting right here. So you can see where was the most recent breakout on the 1 hour time frame. This was the most recent breakout on the 1 hour time frame. That was the most recent breakout on the 1 hour time frame. Price, this now becomes our liquidity. This becomes our liquidity. This was our liquidity, and what the price did, price came back to sweep that liquidity. I'm trying to look for the key level that price tapped into. Sorry, let me see this. I'm trying to look for yeah, that was it, right? Should be down. No, closest liquidity that price tapped in. Sorry, closest key level that price tapped into. That's what I'm trying to find. I don't seem to be getting it right here. Let's see. Okay, price has already given us type 2. You can see price came into that level and reject. Price came and reject. So you can choose to still enter from here. You get what I'm saying? But if you don't want to enter from here, I just want to show you how you can keep refining. Are you get what I'm saying? We have look at the first entry here. This is the second entry that you could have taken. But let's say you don't want to take it again. What can you do? What did price did? Price gave us a rejection from the 1 hour and a close below and a breakout. Sorry, here was the breakout. This was the breakout. A V-shaped key level that was supposed to use for buy that was tested once and then it was broken. So in a scenario like this, you can drop one time frame lower to the 30 minutes. Price came back and touched that key level, but we want to look for liquidity close to it. We want to look for the liquidity very close to it. Alright, so what can you see? A single candle formation that we talked about. You can see a single candle acting as internal liquidity and external liquidity. Are you getting what I'm saying? Don't forget that we have the higher time frame has already given also a bias that we are bearish. So this becomes our target. Are you getting me? This is where we are targeting. Like we are trying to target the equal lows, like the internal range liquidity. Although price is bearish, you can choose to target this low. Are you getting what I'm saying? You can choose to target this particular low because we are coming from a very much higher time frame. You can choose to target this particular one. Are you getting what I'm saying? But for me, I like to target the closest. You get what I'm saying? I like to target the closest because if I was to be taking this trade from up here, I would have targeted the low. Are you getting what I'm saying? But anyhow it is. So on the 30 minutes time frame, what can you see? Price swept liquidity from that level, came into this particular V-shaped key level that sponsored this buy. Then you can take a sell from here. From this key level. Where will your stop loss be? Your stop loss can just be like this. I know most of the time your spread might not allow you to use that kind of a stop loss. And where will your take profits be? You can be targeting this low, or you can be targeting this particular one. Are you getting what I'm saying? I don't want to jump much into how many entries that were there. I don't really have that time. But let me show you something. You can see that immediately price broke again. Price broke structure. Price give us a breakout. What did price did? Engineered liquidity. Price engineered liquidity here. That was the closest. That was the liquidity, the internal range liquidity immediately after this breakout. That was the liquidity, right? And what did price did? Price came into a key level, an A-shaped key level that was disrespected, or price came into this V shape. It's a V-shaped key level that was supposed to be used for Bais that was broken, that was disrespected with an impulsive move. Go to the line chart, you will see it. Can you see it? It was a V-shaped key level that was broken. So what do we do from that level? We can take a cell again. Let me clone this. Let me just clone it. We can take a cell again from here, targeting that same low. Just like that, you can continue doing it like that, continue doing it like that. So basically, that's just how to build bias, how to move from storyline down to entries. All right, so have a nice day.